Alright, now let's continue here on reading charts. We're still looking at daily chart. Each candlestick is 1 day, as well as Euro USD, which is the currency pair. Alright, but if we're actually in a market, just want to show you how we will look at a chart. Let's just cut off, just say from this point here. Alright, so the market last was downtrend. Somewhere in here. Downtrend here that broke. So then it broke, so then we're expecting prices to go higher. Right, so price moves higher, and we see we broke, I'll use this. We broke this level here, and when we broke this level, we created a higher high. So when the market is moving up, we typically create higher highs and higher lows, right? So we have this up move, we create a higher high. Now we should be expecting a higher low. Our last point was here, so it should be something that's above that. So then we get this down movement here. Then we broke it. So then this will be our higher low, right? So then we move up more. So we get a break of this level here. Some people could classify this higher high here and then this as a pullback for a higher low, but I'm just gonna say all this is one move. So then we get this move up. So the point where this trend line breaks is going to be where the higher high stops. So then this would be a higher high. Then we're looking for a trend line to go lower. So we get our break there. We would have first thought that this would have been our trend line. Then we broke, but we didn't break this high. So we can't have a higher with this. So then we would have known that this would have had to adjust. Just say somewhere in there. Then we get this break here. But then obviously we really need to just break this point. So as we can see, this broke past that high. So this would be our higher low. And this point, since higher than that point, this would be our new higher high. But then, so let me just draw the trend line because it's not there yet. So this would have been there. It broke it, but didn't do much, didn't break it, so then we adjusted it here. Boom. So then we get our lower low, higher high here. Then we get our trend line break. Then you see the market starts going down. This is our last higher low. If this is broken, that means the market is changing from being bullish, higher highs, higher low, higher high, higher low, higher high, to bearish. In bearish structures, we create the opposite of higher highs and higher lows, which is lower low and lower highs. So that's what we create once we start going lower. So once this broke, once this higher low broke, we know we just made a lower low. The question is, where will that be at? So we can have our trend line on our lower low. Could have been there, but then we didn't get much of a pullback, so it doesn't make sense. So then we'll adjust this. Some point this might actually come down as well, alright, to make it fit a little bit better. But it should definitely be somewhere on this candle. Just do that. So then we get a break here. So alright, wait, this is our lower low. Let's just mark that. We got the trend line break, lower low. Then we see our trend line break and we start moving higher. And then we get another break. I'm gonna just move this here. Lower low, we get this up to get another break. So then we're gonna have a lower high at this point. Then we're just waiting for this area to get broken to create another lower low. So once this gets broken here, boom, we're anticipating that the next, this lower low, we will break this and go lower. So we can assume that it's gonna break, boom. So then once we get this break, obviously we got a lower low. The question is just where will that lower low be? So we do our trend line. First one would be here. Get this break, but then we don't really get a move up, so I really wouldn't classify that as a lower high, so I would actually move it. So then this move, we have somewhat of a pullback. So then we'll just, could be there, but I'm gonna put it here. So we have our lower low. Have our lower low. Then we see our up movement, getting some movements. Then we get a break. So then at this point, this becomes our lower high. Then at this point, once we get a break, just say we don't see any of these candles, we just see this part here. So we get a break here. Boom. So now we're anticipating that the lower low will be broken next, this here. So actually we're actually not even, haven't broke it yet, but that's what we're anticipating. So at this point, once it broke, we're like, okay, we expect the market to go lower. So we're gonna be putting our down trend line, and hopefully the low is gonna break. So at first we probably have this trend line here for sure, but we got a break, but it's not, it's just a couple candles. We typically want to see a little bit more, so probably would adjust this a little bit here, something right somewhere like this. So then we're just continue thinking that it's going to continue to go lower until we break this point here. Then once we break this point, we're going to wait for another trend line break here to create that lower low, and then create another lower high, or it's going to go lower, right? Break that, and then it's going to reverse back and break this last lower high here. It could break this, boom, which means this would be now a higher high, because this is telling us that the market is changing from bearish, right, to bullish, which is this part, right, where we got higher highs, higher low, higher high, higher low, higher high. This is a bullish market structure. Bullish. Bearish market structure, we got our lower low, lower high, lower low, lower high, and hopefully lower low. That's our bearish market structure. So when market is bullish, if we get in at our higher low point, we should be anticipating higher high to break. So we can get into trades hoping that we're going to trade it up, let this break until at this is our target, or we can obviously try to hold for a bigger move, but no clear objective. Same thing at lower high, we get in here, we get a break, we're going to target the lower low, but obviously we can also target a lower objective, but we just don't know where that's going to be. There's you go to other time frames, different things like that as well, but that is the basics. I guess I probably also should mention, right, this is looking at a daily time frame, but if we go to an hourly time frame, it's similar, just on each candle is an hourly time frame. So this just seems so like this. We're going low, then we have higher. This would be our lower high here, right? So as long as this don't break, we should be anticipating lower prices. But you see here, we actually get somewhat of a ranging market, where price is just slowly moving up, but it never broke this. So eventually, this will be our lower high, and then we get that break down here, which creates our new lower low. But so this would have been a terrible trend line there. We wouldn't have liked that. This huge candle sucks, but I have to adjust this somewhat, or we could just do it or so like this, probably more like it. But then we get an up break, so then we're anticipating up prices. Question is where. It's only a couple candles, so we don't like that. So we actually probably would this. Then we get a down break, anticipating down candles, but we didn't get that. So this seems like that's enough candles, quite a bit. Would have been anticipating the price to continue lower to break this, but it did end up breaking this. Then we're gonna anticipate it to go more higher. So we get a break here. There's only not that many candles. Here it's only 2, so we probably really wouldn't even count that. Would have to adjust this somehow this way and overlook this stuff there, but then we get our break. And then we're going to aim for this low there to break. Then, so once this broke, we would have to actually, we would have had this there, but it's not much there. We would have switched it to this. Boom. But then we got that break, which would have been legit. So this would have been that. Then we'd have had this break actually. Not enough candles there. And eventually we broke, but and eventually we'll go into how the time frames interact with each other, but that's basic. Just wanted to show how we'll look on an hourly too. It's the same concept, but it's just, instead of each candle being a day worth of data, each candle is an hour worth of data. So that one daily candle, if we look at 24 of these candles, that would be the equivalent of the one daily candle. You see, you get a lot more candles if you go down to the smaller time frames, and just think about there's a 1 minute time frame. So like one of these 1 hour candles here would be 60 1 minute candles. It's not always a good thing going down that low, but it is just something you should know. Alright, peace out.